Flip through a newspaper from 2008, and you'll see nothing but headlines of bank failures and credit meltdowns. But in the dead of that chaotic night, a new order, one that bypasses banks entirely, was born within lines of cold, clinical code. Fast forward to 2026, and the total market cap of cryptocurrencies has surged past $2 trillion. That's enough to buy out several Silicon Valley giants or fund the entire GDP of a developed nation. Yet, despite this staggering wealth, one question still lingers. What is the actual point of all this? Is it a speculative illusion, as Warren Buffett claims, or the inevitable future envisioned by tech visionaries? For most, crypto is just a chaotic line on a chart, a series of get-rich-quick stories. But beneath that surface noise, a silent revolution is rebuilding the world's financial plumbing. By 2026, BlackRock has fully integrated blockchain, and sovereign nations are quietly adding Bitcoin to their balance sheets. This isn't a hobby for geeks anymore. Why are the world's sharpest minds and most cautious regulators suddenly racing to get in? If this were all just digital air, this massive migration would be logically impossible. Over the next 20 minutes, we're going to ignore the price hype and dive into the intersection of code, law, and economics to find the hidden truth. In our aging financial system, what are the deadlocks that only crypto can break? We're exploring the disruptive, irreplaceable utilities that justify its existence. We'll show you how blockchain evolved from an experiment into infrastructure, serving everyone from multinational corporations to families in war zones. Let's start with Bitcoin. It's often called digital gold, a term usually dismissed as marketing fluff. But the logic behind it is far more profound than the metal itself. Gold is valuable because it's scarce, difficult to mine, and durable. Bitcoin mimics these traits using mathematics, and in many ways, it actually improves upon them. We live in an era of endless money printing. The paper currency in your hand is being silently diluted by a global debt crisis that shows no signs of slowing down. Bitcoin's 21 million coin cap is locked by mathematical logic. This means no political entity can increase the supply to dilute your ownership of wealth. Most gold investors today hold ETFs, essentially just digital IOUs. But this paper gold is fragile. If a custodian bank freezes your account, your asset is just a trap number on a screen. You don't truly own it until you can withdraw it. Bitcoin changes the game by removing the middleman. For the first time, you can achieve physical possession of wealth in a digital format. As long as you hold that 12-word digital key, those assets belong exclusively to you, unfreezable and unstoppable. Does crypto face system-down risks? While a single exchange can fail, the Bitcoin network is a global web of tens of thousands of nodes. Unlike legacy banks on central servers, this architecture is built to survive wars or massive power outages. It solves a fundamental problem. How do you store and transfer massive wealth globally without having to trust a single, fallible human middleman? Critics point to volatility, but over a 10-year horizon, Bitcoin has shown incredible resilience as the ultimate defense against currency debasement. Therefore, Bitcoin's true utility is acting as the world's first borderless, permissionless, and unseizable ultimate collateral. Next, let's pivot to a tool with even more immediate real-world impact: stablecoins. If Bitcoin is digital gold, then stablecoins are the native dollars of the internet age. Most people don't realize that by 2026, stablecoin settlement volume is rivaling giants like Visa. This isn't just a tech experiment, it's a direct fix for the sluggish settlement swamp of traditional banking. In the legacy system, a cross-border transfer is like sending mail, in the 18th century. Every correspondent bank acts as a slow, expensive checkpoint, peeling off a layer of fees along the way. This lag is fatal in our high-speed 2026 global economy. For small to medium traders, a multi-day settlement window creates massive, unnecessary stress on their cash flow. Stablecoins essentially replace the old pipes. They turn value into light-speed code, allowing USD to move 24/7 with near-instant settlement. It's more than just speed. It's about pushing the marginal cost of moving capital towards zero. It enables micropayments to developers across the globe, even at midnight on a Sunday. This is completely unimaginable before. In hyperinflationary regions, stablecoins have become a survival tool. They allow ordinary people to hedge their savings into digital dollars via a simple mobile app, bypassing the need for complex offshore bank accounts. Despite early skepticism regarding reserves and compliance, maturing regulations have solidified its role as an indispensable settlement layer for global trade. Whether as a hedge against local currency collapse or as the backbone of global payments, stablecoins provide a level of flexibility that traditional banks simply cannot match. They are becoming the invisible plumbing of the modern world, hidden from view, yet keeping the heart of global commerce beating every single second. If stablecoins digitize cash, then our next chapter focuses on the digitization of assets, known as RWA, or real-world asset tokenization. This is a $100 trillion frontier. It's about taking physical property, government bonds, or fine art, and transforming them into digital certificates on a blockchain. Why do this? The answer is liquidity. Take a massive office building worth hundreds of millions. Normally, only elite institutions can buy it, and the sale process takes months of paperwork. Tokenization allows us to slice that building into thousands of digital shards. Now, a retail investor with just $100 can own a fractional piece of prime real estate and its rental income. By 2026, giants like BlackRock and JP Morgan are all in. They've realized that tokenizing assets like U.S. Treasuries creates a hyper-efficient collateral market for institutional lending. These tokens trade 24/7 on secondary markets and can be used as instant collateral in DeFi protocols, bypassing the traditional, weeks-long legal notarization process. This dismantles the monopoly on high-end assets. It doesn't just lower the entry bar, it allows global capital to pivot seamlessly between different asset classes in real time. Moving assets on-chain also brings radical transparency. Ownership history, debt obligations, and every transaction are recorded on an unalterable ledger for all to see. This Internet of Assets marks a fundamental shift in how wealth exists, moving from heavy, isolated silos into a light, interconnected ecosystem. We are witnessing a decentralization of financial power. Assets are no longer locked in expensive bank vaults. They are flowing freely across a global digital web. If Bitcoin is digital gold, then Ethereum is the law and order of the digital world. It's more than just a currency. It's a world computer operating across every border on the planet. At its heart lies the smart contract. Simply put, it's legal logic baked directly into code, giving agreements the power to execute themselves. No lawyers, no notaries. Once the predefined conditions are met, the outcome is executed by the network, enforced and final, with no room for reversal. Imagine an automated insurance system. As soon as sensors detect a natural disaster or a flight delay, the payout hits the policyholder's wallet instantly, bypassing the need for a lengthy manual claims process. By 2026, Ethereum and its Layer 2 networks are processing trillions in on-chain logic. This massive reduction in the cost of trust is nothing short of revolutionary. This tech eliminates the possibility of human default. It shifts the bedrock of commerce from trust in people to trust in cold, hard code. This is why the world's elite developers are flocking to this ecosystem. They aren't just building websites, they are architecting a global set of business rules. While we're still balancing fees and transaction speeds, the maturity of sharding and Layer 2 tech is finally making blockchain as smooth as the modern web. Its unique value lies in providing a shared global space for business execution, one that no single government or tech giant can shut down. Ethereum is no longer an experiment. It has become the foundational OS of digital civilization, powering a global marketplace where anyone can freely participate, completely free from the interference of centralized giants. Beyond elite finance, crypto carries a heavy social mission. It's a lifeline for the 1 billion people globally who have been abandoned by traditional banking. In many developing regions, opening a bank account is nearly impossible, yet mobile phones and cheap data are spreading faster than ever before. Blockchain allows these populations to skip the slow, bureaucratic legacy system and leapfrog directly into the age of digital assets and global transfers. In countries like Argentina or Nigeria, local currencies can lose their value in weeks. On-chain data shows tens of millions of users in these regions have turned to stablecoins, using them as a digital shield to survive hyperinflation. It dismantles the barriers of geography and status. A remote freelancer can now receive international payments directly on-chain, regardless of local restrictions. This means labor forces once isolated from the global economy can now compete worldwide without losing a massive chunk of their earnings to middlemen. This is the true disruption. It shifts the gravity of financial power from central bank skyscrapers to the smartphones in ordinary people's pockets. For these users, crypto isn't a speculation, it's a human right. It's the right to safely hold and freely move the fruits of their own labor. This level of inclusion is something traditional banks can't achieve due to costs and red tape, but Code treats everyone with an internet connection equally. We are witnessing the democratization of finance, transforming it from a privilege of the few into an essential infrastructure available to all. In the future not too far, the most active economic entities in our world aren't just humans, they are hundreds of millions of autonomous AI agents. Here is a fascinating reality. AI can't walk into a bank and open an account. They have no passports, no physical bodies to sign stacks of legal paperwork. So, when an AI needs to independently purchase compute power, storage, or buy data from another AI, how does it settle the transaction? Crypto is the native language of the AI economy. Through smart contracts, AI can execute millisecond-level value transfers without any human intervention or approval. This machine-to-machine, M2M, economy is taking shape. In this system, crypto isn't just an option. It's the only ticket for AI to participate in global commerce. Imagine an AI-driven logistics chain where drones, self-driving trucks, and smart warehouses use stablecoins for real-time revenue sharing and cost settlement. The legacy banking system, with its 3 to 5 day settlement windows, is physically incapable of supporting the high-speed collaboration demands of the AI era. The programmable money aspect of crypto allows every payment to be precisely tied to specific code execution, creating truly automated finance. This will unlock unprecedented productivity. When AI can autonomously manage budgets and optimize costs, the economic efficiency of society will take a massive leap forward. Blockchain isn't just a tool for humans, it's the financial bridge connecting carbon-based civilization with the silicon-based future. Finally, let's explore blockchain as a trust machine, specifically how it verifies truth in an age overrun by deep fakes. As AI learns to perfectly mimic any voice or video, our digital trust system is on the brink of collapse. We desperately need an unalterable record. By anchoring content metadata to the blockchain, we can give news reports, legal filings, or personal IDs an indelible digital seal. Decentralized identity, DID, returns data ownership to the user. You no longer have to trade your privacy to tech giants. Your credentials are locked in your own digital key. Defending truth is the most profound utility of crypto beyond finance. It provides a patch of firm ground in a digital flood of misinformation. Imagine a world where the timestamp, location, and device of every photograph can be traced on-chain, making the cost of forgery impossibly high. It also solves the copyright dilemma. When art and creative content are tokenized, creators can receive royalties directly from every subsequent sale automatically. This shift in ownership frees creators from platform exploitation, establishing a more fair and transparent digital creative economy. This immutability gives the digital world a physicality it previously lacked, allowing virtual assets to possess true scarcity and authenticity. Trust no longer relies on expensive bureaucracies, it relies on mathematics. This is the firmest foundation for trust in our digital future. After hearing about these disruptive utilities, we must pause and confront the shadows still looming over crypto. No technology is a panacea, and blockchain is no exception. First is the privacy paradox. Blockchain's transparency is a double-edged sword. While it prevents fraud, it theoretically turns every individual's financial history into a public live stream. Furthermore, security risks remain constant. While base protocols are secure, smart contract bugs, hacks, and the simple loss of private keys result in billions of dollars lost every year. Then there's the sword of Damocles, regulation. Global legal definitions for crypto vary wildly, and this policy uncertainty remains the biggest hurdle to mainstream adoption. We also cannot ignore energy efficiency. Although networks like Ethereum have drastically cut power consumption, balancing decentralized security with environmental sustainability is still a heated debate. More importantly, for the average person, the barrier to entry is still too high. Managing a 12-word private key is not just inconvenient, it's genuinely stressful for non-technical users. Scalability is another puzzle. If billions use these networks simultaneously, can they remain as smooth as legacy systems? Layer 2 solutions are improving, but they aren't perfectly seamless yet. These challenges aren't insurmountable, but they serve as a reminder that we are still in the dial-up phase of this technology. Before cheering for revolution, we must admit that a decentralized world demands more personal responsibility, something many people aren't yet ready to handle. Only by facing these limitations can we objectively judge whether crypto is solving existing problems or creating new ones. Back to our original question, does crypto have any actual utility? After this deep dive, the answer is coming into focus. It's no longer a fantasy about getting rich. It's a global infrastructure of trust, one built on algorithms rather than fallible human institutions. Where financial systems work smoothly, it's a high-efficiency option. But where those systems are crumbling, it becomes the only option. We've seen it protect ownership as digital gold and accelerate global commerce as stablecoins. We've watched it automate legal logic via smart contracts and democratize elite assets through RWA. More importantly, it is becoming the native tongue of the AI economy and a hard-coded anchor for truth in a sea of misinformation. Crypto isn't looking to replace every bank. It's providing the world with a plan B, a backup financial system protected by math rather than authority. Its irreplaceable utility stems from being censorship-resistant, transparent, and global. For the first time, technology is handing financial sovereignty back to the individual. Perhaps in the future, we won't even use the word crypto. Like the internet today, it will simply dissolve into the underlying logic of how the world works. Is it disruptive? Yes. Is it irreplaceable? For those seeking ownership, connection, and truth, the answer is a resounding yes. After exploring the underlying logic of crypto, do you believe it is a necessary tool for financial sovereignty, or just an overhyped experiment? We invite you to share your perspective in the comments below. If you value this type of objective analysis, please consider subscribing to Stratum Logic. Your support helps us continue our investigative work. Thank you for deep thinking with us.